Hi everybody and welcome to Forex.com's top 3 market picks for this week for Forex Space with myself, Kathleen Brooks. Well, at the start of a new week we had a public holiday in the UK and the US, so it was a fairly slow start. But as we get through this week, we are looking for a few more catalysts to really drive the markets. Now the first of our picks this week is actually going to be dollar yen. Now that's a chart of dollar yen and the Nikkei. Last week we saw dollar yen fall back. It got very close to that key 100 level. 120 was the support level of note, but we've seen a nice recovery on Tuesday's trading. And the reason why we've picked this for the week is because we really think it's being led by the Nikkei. As you can see, when that picked back up, when that got above 14,000, that helped push dollar yen higher as well. That is what we're looking at now as we see whether or not dollar yen can trade towards the top of its range at 103.30 to 70. If it can, then that opens the way for that move to 105. Now, what are the key drivers this week? Well, there is some economic data coming out of the US, including consumer confidence and also house price data. But we think the key risk for this is going to be Friday when we get some Japanese data. Now, we get inflation data, which is the key thing for Japan at the moment. If that is weaker than expected, then people will think that the Bank of Japan will have to do more monetary policy, which could weigh on the yen towards the end of this week. So we're looking for this pair to remain range bound, but as long as the Nikkei stays high, then we could push towards the top of that range, as I said, at 103.30 to 70. Now, the other pair that I'm looking at this week is also cable, so sterling versus the US dollar. Let's take a look at that there. As you can see, cable, well, even though there was a public holiday on Monday, it still managed to be one of the biggest FX movers, this time to the downside. We have had some recovery in the pound, but we really have seen just very, very shallow pullbacks. 151.70 to 80 was repelled actually by the sellers, so there is selling interest there. That looks to us like a bit of a short-term top. And we are also looking for a further leg lower in the pound, back down to those lows from March, which came in at 148.30. However, we would look for a pullback towards that 152.10 to 20 level before we would look at a short position there, because we think that it will be sold on any strength. Just the fact that it was able to sell off so sharply, even on a public holiday, suggests to us that there aren't many pound lovers out there, especially not as we wait for Mark Carney, to take over at the Bank of England in July. Now, the last one I'm looking at is the Aussie dollar. Now, the Aussie dollar has been massively sold. It's been one of the most disliked of the G10 major currencies in intraday low from June 2012. That suggests that the market isn't ready yet to push it to another level, and we may get a bit of a pullback. However, we do think 97.20 to 30 would be the high there. The other reason why we're looking for a pullback is also because it is looking incredibly oversold, very, very stretched to the downside. You can see that in the RSI there, which is at 23. Remember, anything under 30 is considered oversold in the RSI, but you can just look at the chart and see how oversold and how stretched it is. It has come a long way very, very fast, and we think the market is going to take a breather. Again, as we said, that 97.20 to 30 level could be a bit of a short-term resistance level. Anything really above 98, between now and 98.40, suggests to us that we're moving forward, moving sideways, that the downtrend will still continue, but we're on a pullback. If you were to get above 98.40, then I'd probably change my view. But right now, I still think the Aussie is a sell on any rallies, but we think it just may meander for a little bit, just to get rid of some of that oversoldness on the RSI. Okay, everybody, good luck trading this week, and please do join us next week for more. Thank you.